We're here for you on the Talk of the Valley, ON Radio.
Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
Good afternoon. My name is Paul Vanas, and welcome to Real Estate Pro Talk. This is a real estate-oriented program which will cover a variety of topics every Friday afternoon on WON Radio from 3 to 4 p.m. Some of the topics we'll be talking about during our time together is how to choose a mortgage broker, how to choose a real estate agent, creative financing, home inspections, how to buy a property with an IRA, and a whole lot more. I've been in real estate business coming up on 40 years now, of which I own a real estate brokerage company, a real estate school, and a land development company. All the knowledge that we are going to try to impart on you today is based on the continuing education classes that I teach licensed real estate brokers and agents, along with my personal experience and those of our expert guests. In doing this, the goal is to have you be knowledgeable when you meet a real estate professional, and they'll be certainly impressed with you because of the knowledge that you've learned on this show. As last week, I would suggest that the listeners grab a pencil and paper, or a pen and paper, or your iPhone, or whatever you use to write things down, because we have a special offer this afternoon with our guests. I'd like to welcome both Mike Plummer and Dave Travers of Main Street Home Loans. Good afternoon, guys.
Good afternoon, Paul.
All right, how you guys doing today? You doing okay?
It's a little rainy, but we're doing good.
Better than snow, right?
It's true. It's better than snow.
Yeah.
With the holiday season coming, so.
Wow. Yeah. No. It's it beats having to trudge through 6 inches of slush every day. I'm kind of as you get older. I used to, up until about 4 years ago, people would say, "Oh, it's cold. Oh, it's snow," and I'd say, "Stop your crying, for God's sakes! It's Rhode Island." Yeah. And now, when I'm ready to move to Florida. It's amazing how a certain age makes you change. But in any event, tell me, guys. I always start off the segment of the show with about a little bit about your history. How did you both get into the mortgage business? Any Dave or Mike, you and
Yeah, I wasn't slated to go into the mortgage business. I was going to college, Bryant College, pursuing my degree in healthcare management. And the year I graduated, the healthcare industry in Rhode Island kind of collapsed a little bit.
Wow.
And there were no jobs. So I had a friend that was in the mortgage business, saw that he was doing well, saw that he really enjoyed helping people, and I took a shot at it.
Wow.
I joined a company, started right at the bottom, started in telemarketing. I came out of Bryant College,
really?
Paying $19,000 a semester, and making $19,000 a year was a bit of a shock, but I really wanted to do it. I saw the value in it, and over the past 20 years, I moved through the subprime industry, ran the operations for my previous employer for 7 years. Mm-hmm. And currently, I'm at Main Street Home Loans as a branch sales manager, working with a great group of guys and girls.
So instead of physical health that you were trained in, now it's financial health, right?
Exactly, financial health.
A little change of venues there, but it's basically the same thing. You're still looking out for people, right?
Oh, absolutely. There's no better reward than getting somebody financing to help them purchase a home and watch them just immensely, enjoy that. It's really rewarding.
That's great.
Yeah.
How about you, Mike?
So mine's actually kind of similar to Dave's. So I went to URI, graduated with an accounting degree. Now I graduated in 2007, and for those that remember, 2007 was not really a good year for the job market.
No, it wasn't.
So I came out, took basically any job I could, which was at one of the largest financial institutions, and I took a service role there because, well, they paid a couple bills.
Right.
I ended up being there for about 10 years, a little over 10 years, and at the last stage I was actually a wholesaler there, and I did really like the job. I really liked the markets, which I still get a little bit of the side because obviously rates and kind of getting to study that, but I think what ended up leading me to this side was I never got to deal with the end client. So
That's interesting. Yeah.
Yeah, I sold directly to financial advisors who put the products in the client's portfolios. So there really wasn't any joy because you were never really helping anybody or getting to see the people you're helping at the end of the day.
Right.
So my boss had been recruiting me for many years, and I kind of first blew him off, and then finally thought, you know what? I get to do a little bit of the financial side, and I also get to help the end client and see that fully through. So it made a good sense. So I came over here about just shy of 3 years ago.
So at the end of the day, you both see the satisfaction of the end product. You know, the actual houses that the people are buying, and the families and the kids and the hugs and the kisses and the whole 9 yards. That's pretty cool.
We get to see it all. You definitely, especially the children. I think that the kids, when you can see that look on their face, when they walk in the office, we hold a lot of our closings in the office, and we get to watch them sign the paperwork. And when you hand over the keys, just the expression and the gratitude, and you can see the impact you made on somebody's life.
The tears sometimes that come down.
It's why we do what we do.
Yeah.
It really is.
It really is amazing. I see the pictures that you guys put on social media, on LinkedIn. I'm not an Instagram guy yet. Maybe somebody could show me how to use Instagram. But I see the pictures that you guys put out practically every day of the families, who you just closed a loan on, and they're certainly so appreciative. Because I can't think of anyone who want to take a picture with me, but that's really nice though, because at the end of the day, you have something. You're like a mason, basically. At the end of the day, you got something to show for your work instead of just pushing papers and not seeing the end result. Yeah. That's wild. It's
extremely satisfying. I mean, David can attest to this too. I mean, how many times you get invited to a housewarming party or something afterwards, and now you became a friend or a part of the family from somebody that you helped over this X amount of time process. So it's nice to be able to actually work with end clients. That's essentially why I ended up coming over here 3 years ago. Absolutely.
Wow. That's great. So, Mike, how do you see the current market right now? It's a pretty busy place. You pick up the paper and you read, on a Sunday paper, and you see all these different mortgage companies. There's like 40 ads in the paper every Sunday, and of course it can be intimidating for someone who doesn't really know anything about mortgages. And couple that with the market, houses are going pretty quickly, right? So how do you see the market right now?
Yeah, it's a great question. I mean, you can, depending on what news paper or what station you're listening to, you can view it as either extremely positive or extremely negative. So, I mean, if you're looking from the negative side, and I don't, some of the things you might hear, and I actually got some of this information from you, Paul, because you did the research, so I'll credit you with this. But, the average home price right now in Rhode Island is $292,000. Which is actually 3% higher than it was right before our financial crisis. So you can hear some people saying, well, home prices are too high. And right now, home prices have consistently gone up for the last 11 years in a row. And the last time that happened was 2006. So we know what followed. So you do see some of that in the news. I don't think any of that is accurate. That was a completely different world back then. Dave can attest to that. They were doing no document mortgages, stated income. There was a lot of things getting through that shouldn't. I mean, people were buying fourth and fifth vacation houses that were making minimum wage.
Have been doing that.
Exactly. So I like to focus.
Basically, like the no-income verification loans back then. You could walk into any mortgage company and say, "Oh yeah, I make $400,000 a year. How much would you give me?" And then they went out and
Absolutely. I mean, they used to call them the ninja loans: no income, no job accepted.
I haven't heard that one before. That's great. That's great.
Yeah. So, and then there's a lot of the positive things I think that we should focus on. So rates are extremely low. The Fed has basically continued to say, and by their actions shown, that we want to keep rates low.
Yep.
So as long as rates are low, employment is extremely low.
Yep.
And I don't really hear of any people out there, any companies out there starting to pick up their layoffs. You hear a little bit, but it's not anything that's going to make a dent in the economy.
Yep.
As long as those two things continue to stay low, I think we're in a safe place. The other thing, too, is that it's, as you know, a supply and demand situation. So in Rhode Island specifically, we need 5,500 houses to be built just to keep up with family formation and dilapidation. Well, last year there was 550 houses that were built. So
Right. Wow.
you're going to continue to see, it's going to continue to be a seller's market. You're going to continue to see a lot of buyers out there. So we do think it's going to continue to stay strong for at least the next couple of years. That number I just gave you is actually not a specific to Rhode Island either. So I don't want people to think that Rhode Island is just can't build houses.
Right.
Nationally, we need about 1.8 million built, and we're around 1.3, 1.35. So as
So
a
we're
nation,
not even keeping pace
with just
Right.
new demand. So I think, and not to get too analytical on you, which I probably you already did, but it's that I think that we're going to continue to see strong demand from a buyer standpoint.
Yep.
I do think that home prices are going to start to level out. I think they're fairly valued. I don't think they're overvalued, and that's going to continue to keep this market as long as those rates stay low and unemployment stays low.
I see. And Dave, too, well, let me back up a minute before I go to Dave. You and I was speaking the other day about the market in general, about last winter. I follow the data, the real estate data, and I noticed last winter didn't even hiccup. The market kept going strong all the way through the winter, all the way into the spring, which years ago, that was unheard of.
Yeah.
I mean, unless it was somebody who really needed a house, on Christmas Eve or whatever, and we were always in a position to do that if they needed it. But the world kind of just took a breather between November 25th and maybe January 2nd. But that didn't happen last year, right?
No, and to that point, we were talking about this. I mean, there's a couple things that might be. One is that the younger generation doesn't seem to mind moving during the holidays as much as the older generation was. It doesn't seem like different holidays or anything affect them as much. And the other thing is, being in a seller's market, a lot of the buyers know that the seller controls when and where, so they're out there just trying to find a house.
Right.
If they have to move during Christmas or if they have to move during Thanksgiving, they'll do it because that house is more important to them than that one holiday.
Yeah, right. Well, imagine that. Yeah, that's wild. And of course, there's a diversity of mortgage products now, right? Dave, there's you guys write how many different kinds of mortgages right now? I mean, there's different specialty mortgages, right? Can you elaborate on some of the different kinds of mortgages?
There's a wide spectrum of mortgages that we have available for all our clients. Whether you're a first-time home buyer, if you're looking for a low down payment, maybe some down payment assistance, we have those programs. If you're an investor, we've got the conventional products. Even if you're a contractor, a property flipper, we have some renovation loans for people if you want to sell your houses to those people. We have the FHA 203K, where we'll give you the money to purchase the property along with the money for the renovations.
Yeah.
So now, you've got the full loan at one time.
Wow.
You don't have to go out and get a line of credit later. You don't have to get a Title I loan.
Yeah.
We'll give you the funds to purchase the property and do the renovations.
And that was always the hurdle. I got just enough to buy the house, but now I don't have enough to fix it up.
Right, exactly. And most people always thought, hey, listen, that's only with an FHA product. Conventional has a renovation product too. It's called the Homestyle Renovation Loan. Another great product.
Really?
You go the conventional route, you're going to see that might drop off if you're not putting 20% down. And the best products we have, outside of conventional and FHA, is we have Rhode Island Housing's full spectrum. Most brokers or lenders or banks only carry a couple products. We have everything. We have their FHA, all their conventional products. We have their renovation product.
I see.
We also carry their USDA and VA product. And that's where you're going to get the down payment assistance.
Wow.
If you're looking to get into a property, zero down out of your pocket, zero money out of your pocket, we can get you into a program where you get the first mortgage with Rhode Island Housing, and then you can get the extra assistance loan with them for the full down payment.
That's
It's really a great product.
And then the buyer, all of a sudden, once they own, they start getting the tax benefits of home ownership. So you can actually buy with little to no money down, which is, I think it's fantastic in this day and age. I mean,
Dave, you threw out a few acronyms just for the people that listen that might not be familiar. Do you want to explain the difference what VA is and what USDA is?
Sure. A USDA is a rural loan. It's made for properties that are in areas that are designated by the Rural Housing Authority. 100% financing. There are some income limits on it. Great product, great rates. A VA loan is a veterans loan. It's made for veterans. Retired, active duty, disability. Another great product, 100% financing, no mortgage insurance. Great rates. I'm actually closing my sister's loan with this product on December 12th, and it's zero out of her pocket. All she had to do was pick up the closing costs, and it's a wonderful product for our veterans, and we love doing those products. And with that product at Main Street, we give them no fees. We do not charge our veterans fees. We do not.
That's quite a thing. Now, the VA, if I remember right, and I don't know if this is still true, they used to be assumable at one time. I don't know if they're still doing that, but I know FHA and VA were assumable at one time, and that kind of went to the wayside. But those government products are fantastic because they were designed to help people out as compared to years ago where you had to have 20% down, or you were either a VA, and if you weren't a vet, well, then there was FHA, and then there was some things, obviously, with FHA that were a little different from a conventional.
Right. The FHA product, that once again, if you have a first-time home buyer, maybe you don't want to borrow the money from Rhode Island House, and maybe you have the 3.5% down. You've had some credit issues in life. Life just happens sometimes. You can't control that.
Sure.
Maybe you've had a couple late payments. Your credit score is a little bit lower. Your debt ratio is a little bit higher. This is a great product, a great entry product for somebody like that to get their foot in the door, buy a home, and start rebuilding. And then they can later on refinance into a conventional product.
Now, I know we really didn't talk about this at all, but not to throw a zinger in there, but the rates right now are at historic lows, right, Mike? When I bought my first house, it was 15.95.
Yeah.
And my father said I was out of my mind. He wanted to give me a crack in the side of the head. But, he didn't understand that's the way it was. It was either 15.95 or no house.
Absolutely. Yeah, and I mean, one of the things that I absolutely love talking interest rates. So if any of the listeners want to have really boring conversations, feel free to call me, and I'll gladly talk to you after the show about it. But, I mean, like you had mentioned, if you were in the early 80s, late 70s, you could have been anywhere from 12 to 18%. And for the last 30 or so years, we've been seeing interest rates decline. So, I mean, right now, the rates, particularly in FHA, are extremely low. You can get mid to low threes. Conventionally, you're looking somewhere maybe high threes to low fours, depending on, obviously, your credit score. But it's historic low, and it's funny. I always talk with people because they do go obviously up and down. They don't just go down, obviously. Yep. And every time they go up an eighth, I'll have a client call me and get scared. And I do like to kind of know, hey, if you go back to 1932 and you look at interest rates and you take the average mortgage rate is 7.75 on a conventional loan.
Really?
So
historical
data.
Average? Okay.
So, it's funny. Some people be like, oh, well, it was 4 1/8 last week. And I know we just got a house this week and you said it's 4 1/4. You're still getting a deal. Rates are still really low. So take advantage of it while you can.
So I'll ask you while I still have you, Mike, what does the typical buyer look for in a mortgage? Is it basically the rate? Is that the most important thing to them, or is it the program, the benefits of the program for quality? I mean, you tell me.
Yeah, I mean the first thing that any buyer generally says to either Dave or myself before they even run credit or tell us anything is, "What are your rates?" That is generally the first thing. Now, that's what I try to get them away from thinking.
Yeah.
You got to think there's so much more that goes into it besides just a rate. Like you mentioned, I can get you a much lower rate and put you in an FHA loan, but if you have great credit, I'm not doing what's best for you.
Right.
I could be putting you in a conventional product that long term is going to be a lot cheaper for you, isn't going to have upfront funding fees, your mortgage insurance is going to go away. So a lot of times I try to talk to the client about, let's make sure, one, we can get you pre-qualified. Let's find the best product for you.
So it's not a one size, when you walk in, you go, well, we only have one size shoe here, take it or leave it kind of thing.
No, we like to tailor our products to the individual client because there are so many. And clients, if it's particularly for their first-time home buyer,
right,
they're completely unaware of all the different products. They do focus on rate, but we try to back it up for them and say, let us do what we do, and we'll find you the best possible product for you. And then we'll talk about the interest rate.
I see. Wow, that's good information because, again, it's so complicated now. It's not like it was, just 10 years ago. I mean, there's the specialty programs now. There's people who can buy, they don't know they can buy, and they're not going to find out until they call you guys, right? Dave, I'm sorry. what are some of the misconceptions that you think buyers have? I mean, what happens is, you know what happens in life. People will go to work and they say, well, I'm buying a house. And then all of a sudden, they hear every horror story, everyone, like if they're in my family, they can't be to the positive. They got to be to the negative just to give the guy the poor, negative situation on everything. You must hear that when people call you and they're on guard, the misconceptions. What?
Oh yeah, I mean, there's a lot of misconceptions out there, regarding purchasing a home and if you would qualify for purchasing a home, what you needed, how much money down, what credit score. The biggest one we think is people think they need a big down payment.
Right.
You don't need a big down payment.
Okay.
As we just spoke about, we've got Rhode Island Housing where we can get you into the product with no money down. If you're a veteran, you've got the VA loan. If you're in one of those rural areas, you've got the USDA loan. So you don't need a large down payment. Conventional product, you can get away with 3% on a single family.
Right.
And with an FHA loan, you can get away with 3.5%, 1 to 4 family.
Wow.
So down payment shouldn't be the issue.
No.
Next that comes up to us is really credit score. I don't think I qualify because I don't have a 720 FICO score.
Right.
Well, going to those days as well, that's the conventional bank borrower that you're going to see out there that can go anywhere.
Okay.
With us, we can go all the way down to a 620 with Rhode Island Housing and a 580 with a regular FHA loan.
So you just mentioned something our listeners might be attuned to. A FICO. What is a FICO score?
Sure. A FICO score is a credit score. So when we pull your credit, there's 3 bureaus that we pull from: TransUnion, Equifax, and Experian.
Okay.
Each one of those 3 bureaus give you a score. And what lenders, brokers, bankers are going to do, they're going to take your middle score.
Okay. So it's not like the old days where you walk down to the branch and you saw Harry, the branch manager, and you're hoping that just your relationship of saying hi to Harry every Friday afternoon got you the loan. There's an actual score now you have to meet, right?
Right. There's a minimum score you got to meet. You have to have, when the mortgage industry collapsed last time, they came out with the ability to repay.
Okay.
That got rid of those stated income loans Mike was talking about previously. Those, you're a school teacher. I see your W-2 says you make $50,000, but you're telling me it's $100.
Right.
Those days are gone. So FICO score, that we see is, not a barrier anymore.
I see.
Also, some buyers think it's prudent not to hire a real estate agent because they think it's going to cost them money.
Okay.
But when you hire a buyer's agent, the seller actually pays for your agent.
That makes sense.
Makes total sense.
Makes total sense.
You're hiring somebody who's knowledgeable on the market that you're looking to purchase in.
Yep.
They're knowledgeable on the contract that you're about to sign to purchase this property, and they're going to work on your best behalf. So it's not your cost. I definitely suggest getting yourself a buyer's agent to represent you. Don't go at this by yourself.
And they know the area, they know the location, they know the works. Well, again, getting back to those misconceptions, do you find that obviously when I'm kind of off the sheet here, but you just made me think of something. When someone comes in and puts a mortgage application in, you actually have to sit down with them, right? And it takes a little, an hour or so to go through. I don't know.
About that.
Okay. And they have to bring you certain documentation that you've asked them for, which is reasonable because they have to prove that they're working and they have the ability to get an income.
Yep.
However, do you see any common things that pop up? Is there any one least common denominator thing that you see that most buyers have to do to make it happen? I know a lot of people work overtime, and sometimes you can't use overtime, or some people have rental income and they can't use the rents. Is there any one particular thing that?
I mean, it's difficult to say because of the fact that every program is going to qualify rental income a little bit differently or overtime differently. So it's not necessarily one thing. I think one thing that we're seeing a lot lately that kind of maybe adds to the misconception a little bit, and kind of to your point, is that Jim Smith and Jane Doe are a couple looking to get married, and they both just graduated college and they want to buy a house.
Right.
And they go, oh, well, we can't because of student loan debt. And that
could be heavy, right?
It can be heavy, and it's
right.
So it's a misconception you can't buy without it. And student loan debt's a good thing because you need to get your education. but there's actually a certain way that we can calculate it can help you get pre-approved versus just basically saying you owe $100,000 to, the Department of Education. We can't help you out. So, I mean, I would, to kind of, there's not necessarily one thing, but being able to work around student loan debt is one of the, I guess bigger kind of things as far as misconceptions and ways that we help.
Yeah, and I would think that's prevalent now. Again, 20 years ago, we didn't have to worry about that because it never came up. And now, with the cost of education, it's great stuff. So we're going to talk a little more with Dave and Mike when we come back. We're going to do a quick commercial break. And again, grab your pencils and papers because we have a special opportunity for you.
Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
Okay, and we're back on this rainy Friday afternoon in November, 1 week away from Thanksgiving. Can you believe it? It's unbelievable.
I'm ready.
You're ready?
I'm ready.
You're ready to do it,
I'm ready.
Yeah.
It's a big event. We go to my brother's house and all the family goes over, and it's just a big feast, and we watch football. And then we go home and go to sleep.
And those are the times you're going to remember. That everyone remembers the rest of their life. When the good times. And how about you, Mike? Do you guys do anything special?
Yeah, I mean, it's just a lot of family, a lot of food, a lot of football, and a couple of beverages in between.
Unzip the top button of the pants and kind of sit somewhere in the corner and kind of veg out.
Yeah,
but
absolutely.
No, getting back to what we were talking about, some of the misconceptions. Mike, you had mentioned you had known a couple of things that the buyers kind of aren't aware of when they step into this process. Is there anything in particular come to mind? Yeah,
well, I mean, I kind of want to elaborate a little bit on what Dave was talking about and kind of what generally the biggest hurdle I see. And that biggest hurdle I generally see is the consumer themselves. So when Dave or I talk to an individual, most of the time they're sitting there going, oh, well, to their realtor, I'm not going to call the mortgage guy because there's no point. I can't get a loan. I know I can't. And then when we break it down and say, well, we can get you $0 out of pocket, and we can get you some closing cost assistance from the seller potentially, it's like, oh, okay, that sounds pretty good. But my credit score. And what Dave and I do too a lot is we help rebuild the credit. So if you're below 580, that doesn't necessarily mean we can't get you a loan. It just means we need to sit down with you. We need to come up with a plan. We need to execute on the plan. And we'll say, well, 3 to 6 months or 2 months or whatever it is, we should be able to get you there.
So you tell people what they have to do to repair the situation.
Absolutely.
Over a certain amount of time, right?
Mm-hmm. Yeah, we put a plan in place that is going to tell them, right now you're a 550. We need you to get to an X amount to do whatever this program is. Yeah. Here's how we're going to get it to. And we put it in place so that we're not trying to make anybody not eat that month by paying off certain bills. It's I need you to pay your American Express from $1,000 down to $200. That's $800. When can you do that comfortably? When is it that it's not going to take food out of your children's mouth? All right, it's going to take 3 months. I'm going to check in on a month and see what you get it down to. Second month, 3 months. And then, so that we can eventually try to get their score up. Because we have computer systems that can basically put together, if you pay off certain bills, where it should have your credit score to jump.
Oh, really?
Yeah. And then the other thing is...
It creates like a model of what...
It creates a model on if you do X, Y, and Z, where your score should jump to and what the time frame it's going to take to get there.
Okay, that's cool.
And the other thing, and I hear realtors talk about this all the time, and you can probably attest to this, is that, say you're going to sell your house. The client goes, oh, well, Paul, I looked on Zillow, and it should be selling for $450,000.
Right,
and you go, this thing's lucky to get $325,000, right? But Zillow said it, so that's true. Well, we kind of have something like that on our end where a lot of people have My Free Credit Report or creditkarma.com.
Yeah.
And it gives them a credit score. But basically what it does is it just uses algorithms to tell them roughly what their score is.
I see.
So a lot of times people come to us and say, oh, Credit Karma said my score is a 570. I'll check in, it'll be a 640.
Yep.
Sometimes it works the other way too.
Right.
So people say, oh, I know I can get a loan, so I don't need to get pre-approved now because I'm just going to go look at houses because it says I'm a 660, and then I comes back and they're a 570. So, that's a kind of another one that clients rely on a lot, and we try to tell them, like, don't look at it. It's let's get the real information. Just like you want to go, what that house is going to sell for. A lot better than Zillow is going to sell for. So
you take the fantasy out of it. You're almost like an Olympic coach. You got to get the athlete ready for the games, right? And the game is getting the mortgage, right? And this is what you got to do. Instead of 400 sit-ups every night before you go to bed, you got to do X, Y, Z. That's
exactly.
pretty good.
Yep.
So tell me, guys. Either one of you, we can go around. Well, what's a situation where the typical tough situation or a tough situation that you had a particular buyer that you turned it into a win-win for them? Anything come to mind? Or?
Yeah, absolutely. I mean, and it ties directly in what Mike was just talking about with credit. I had an older gentleman and his wife come to me probably about 6 months ago. They've been to 4 or 5 different lenders. They've run through 2 or 3 or 4 realtors, and nobody would help him out because every time somebody pulled his credit, he had a low credit score.
Right.
But nobody took the time to sit down with him and do exactly what Mike just spoke about. Wow. Hey, listen, if you take these 2 little credit cards, it could be as little as a $300 balance down to a $100 balance.
Yeah.
And it can move your score 30, 40 points.
Wow.
I worked with this gentleman for 3 months. We took care of his credit. We got his scores where they needed to be. We got him pre-approved. Wow. We actually went a step further, and we work with a number of realtors that we love working with. They're great business partners. And I took this client and I gave him to one of my really good business partners that does a ton of business in the area he was looking for.
Yeah.
Found him a house, got him in contract, and closed the loan. Wow. Something he thought, everybody else told him in his past that he couldn't do. Right. Only because, Paul, what I see in this business is most people worry about their paycheck today.
Of course.
If I can't close this customer in the next 30 days, I want to move on to somebody I can.
Yeah.
Not where we work at Main Street. We want to take that client. We want to show them how we can improve their life with credit. Anything else we can do, and then get them in the process of getting pre-approved and purchasing a home.
Sure.
That's kind of what we like to do where most other people will throw that away.
Yeah.
We keep that, we cultivate that, and then we turn them over to one of our great realtors and get them into a home.
And it's just like any other thing. The foundation is the toughest thing to build on a house. That takes the most amount of work. And then, what you do is you're building the foundation for the relationship later on. So 5 years from now, 10 years from now, whatever it is, they're on their way home from Scarborough Beach on a Sunday afternoon. They walk into a house, an open house, and all of a sudden they had no intentions of buying that day. And then all of a sudden it's, we want to buy this house. Let's call David Mike, and see what it's all about. You're right at the top of the game.
Absolutely.
And that story he just told is probably one of 50 he could tell, and same for me. It's and those are the most rewarding, sometimes the most difficult, but the most rewarding because of the fact you see the pure joy from the clients. The story that I was going to tell is a little bit different from the one he told, where I got a phone call about 14 days prior to the closing. He was obviously already in a contract, and he was using a bank. The phone call I got was, you don't know who I am, but my realtor told me to call you. I'm supposed to be closing in 2 weeks, and I just got denied by my bank right now. So
wow.
Obviously that's a tough phone call
Bang,
to take.
Right out of the gate.
So I said, okay, well, let's sit down, let's get this figured out, and let's see if there's something I can do for you. So we sat down and we took a look at everything.
And I can honestly tell you, before you continue, 95% of the people after hearing that would have said, well, try me in 6 months. I got a call on another line. Take it easy. Whatever. Have a nice Thanksgiving. Because that's the reality of it.
And he loved this house. He wanted to move in. Him, his wife, his kids. They just did not want to miss up this opportunity. So we ended up sitting down, taking a look at it. I talked to my underwriter. We kind of found out where they were going wrong, and we figured out that essentially they were kind of maybe miscalculating the use of some income, and we were able to get them approved, and we were able to close. I think it was 3 business days past his actual date. So
from the original date.
So in about 17 days, we were able to get the thing, up running and closed.
That's amazing.
So his family was extremely happy.
Sure. You guys are the heroes at that point, right?
Oh, of course. Yes, that's when you get invited to the housewarming party.
Right. Wow, that's great.
Those can be extremely stressful because we go from not knowing about the situation at all to this being a top priority.
Yep.
And we're trying to do everything we can. We're figuring out the details, just trying to pull as much as we can. But when you get it to the closing table, it's like it was 100% worth all the stress.
That's wild. Yeah. That's wild. So it gives you a nice warm and fuzzy feeling at the end of the day to know that you've done something for someone that someone else couldn't do. That's great.
Yeah,
I used to do the same thing with basically with first time home buyers. They'd call me and they'd say, they sounded very low and disappointed and so on and so forth. And I almost made it a mission to prove that I could get them a house and someone else couldn't. That's how it becomes. That's an ego thing after that. So you can win that loyalty. So tell me, Mike, what's the fastest growing category of buyers that you see right now?
Absolutely. It's definitely the first-time home buyers.
Still out there, huh?
Still a lot of first-time home buyers.
Yep.
Typically, it's the millennials, and what we're seeing is that, I'm at the older age of the millennials, but I'll tell you, as far as our generation, what we basically said to everyone else is that we're not going to be like everyone else that's come through. What we're going to do is we're not going to get married. We're going to be extremely mobile. We're going to move all around the country for our jobs. It doesn't matter. So we're going to rent for our whole life. And then, that's just going to be how it is. And, you better like it.
Right.
And then everyone gets to about 25, 26, 27. Then they meet somebody. And then they end up going, back home. And then they end up buying a house. So, we held off for a long time, which is why there's such this demand of first-time home buyers, because we did it a little bit later than the other generations. We're a little bit more stubborn.
Right.
But we're seeing a ton of, young couples that are first-time home buyers.
Wow.
That's absolutely our number one demographic. And I can't speak for David, but I mean, that's absolutely my favorite type of person to help, because if you've bought 6 or 7 homes, you go, okay, yeah, I know how this works.
Right.
You buy a house first time, you go through and you explain everything from A to Z, and they're like, oh my, this is so eye-opening to them, and they're just so appreciative of everything you do.
And because you're closer to their age than someone like me, so my son, I tell him I'll send him an email, and it's almost like I'm saying I want to send Morse code or smoke signals. He doesn't want to hear that, believe it or not, or Facebook. He said, Dad, nobody under 30 is on Facebook. I said, what are you talking about? Everybody's on Facebook. So, you're more in tune to their language. Now, I heard an interesting statistic, and maybe you know this. Other than the student debt, I had read that a lot of the millennials were reluctant to buy a house because of 2006, when they were, in their teens, 13, 14 years ago. They were seeing what was happening to either their parents or their friends' parents or whatever. Did you?
I don't personally see a lot of that. I mean, that definitely could be something. I don't personally see a lot of that because a lot of the people, like you had mentioned, were so young at the time. I also think that a lot of people have short-term memories.
Okay.
So they don't really remember and look back too far.
Okay.
So it's not a situation I'm seeing. Like I said, I'm more seeing the person that just kind of held off because they moved to Texas or wherever, and they came back for jobs and they ended back home, and they finally found that person, or they said, well, I'm going to live in my mom's basement for a little bit because it's free and I'm just,
and it's quiet. I get my laundry done, and
exactly. And now they're like, okay, it's time to step out and move
Mom and
out.
Dad are driving me insane. I got to get out of here at all costs, right?
Or it's the other way around. You're driving mom and dad's in and they want you out.
Yeah,
exactly.
One or the other.
Yeah. Mom and Dad aren't used to someone coming home at 4:30 in the morning, and their door opening in this day and age. But what you say is very interesting, and it all goes back to your company. Like you must have a big team of people, Dave, that's working in the back room, making sure all this stuff happens. How does that work? What's the function? Like, you take a loan application, you have to hand it off to somebody, right?
Yeah, absolutely. And I may be a little biased with this because I work for Main Street. But yeah, in-house, we do everything. We don't outsource anything. So after we take a loan, our job as loan officers are to take phenomenal loan applications, collect the correct documentation up front, and hand it into our operations team. And we've got some of the best in the business that sit in our office, right in our office, that process our loans and close our loans and underwrite our loans. Once we hand it off to them, and it's within 24, 48 hours, appraisals are ordered, title work's ordered. They're going through the verifications. They're contacting the borrowers, and we're moving that loan right through underwriting rather quickly.
I see.
And we see that as such a big, value add that I can walk 15 feet across the hall to my underwriter. If I have a question about anything, I'm talking to the guy who's going to be signing off on my loan.
Right.
He's giving me the answer before I even do anything. So I know the answer already. I know that loan's moving through the system. And then when he's done, after we clear the loan to close, I've got 2 great closers in my office. So having my full operations team, processing, underwriting, and closing, sitting right in our office, the communication is so much better. The levels of service are so much better. We can move loans around if we need to accommodate for what Mike just talked about. We saved a loan from another lender, and we really want to get that closed, as close as possible to that original closing date. And because it's not the borrower's fault.
Sure.
It's the other person's fault. So why punish them?
Right.
And we have that kind of setup where we can help that situations, and that's everything done internally.
So everybody's everybody's singing off the same song sheet, like that situation that Mike just described. The guy that that called and said his sale crashed or whatever, his mortgage crashed. I mean, everyone in the back room knows how important this is too, right? So they're
Absolutely.
it's the team. It's not just
Absolutely, Paul. And we built, this company was built pretty unique, and we put one little key thing into play with the entire company is, we share our profits with all our employees.
Wow.
They just came
wild.
out. This is unheard of. Companies talk about doing it. They normally do it just with the salespeople, not Main Street. Main Street's doing that with everybody. Operations, sales, because we know it's a team effort. We know without operations, we can't close loans. Operations knows without sales, loans aren't coming in. They don't have a job.
Right.
So we put something in play where we're going to profit share. And we just had our year-end call. First year out of the box, Paul, we're profitable.
Nice.
December 15th. We're going to be issuing some discretionary bonuses to all of our operational people.
Nice.
And then on the 29th to our salespeople. So by doing that,
It gets them involved.
And listen,
They're front line.
aligns
They're
their
just
goals.
as much front line as you are.
and they know
Yeah.
I'm going to get this loan through the system as quick as possible, because if I make this go past the rate lock date and we have to extend, that's a cost to the company or to the borrower, and that lowers that pool.
Right.
So everybody
Exactly.
wants to deliver the highest levels of service.
Absolutely.
Just because we like to do that,
Yeah.
and it doesn't hurt that there's a little bonus at the end of that as well.
Absolutely, and it's not just a job at that point. You're in business. Everyone in the room is in business. They're all have the same goal to make it profitable, while at the same time helping out the client. You had mentioned an underwriter, Dave, and a lot of folks might not know what an underwriter is. What does an underwriter do? What are they in an organization like yours?
Yeah. So as we mentioned, the loan officer takes a phenomenal application. They hand it into their processing team. The processors get the file together, get all the documents, and submit it to underwriting for review and approval. If everybody does their job right, my underwriter is basically just verifying the credit, the income, the appraisal, the assets, all match up with the findings.
I see.
And when I say findings, I mean, we run a loan through the system, the underwriting system, whether it's desktop underwriting or loan prospector. Those are the 2 automated underwriting systems that pretty much everybody uses.
Yep.
Some people only have one. We have both.
I see.
And it tells you what you need to gather. And everything just has to match up. And
So the underwriter is basically the last word. The buck stops with them. It do not pass go. Do not collect $200. It's either the underwriter is going to give it the thumbs up or the thumbs down, right?
Yeah, correct. And they're very customer friendly. If they see they're going to help us, they're going to move the file along. They're not just going to kill a deal. They're going to say, hey, listen, if we structure it this way, they know at the end of the day we want to put together a clean loan, a great loan, and get to the closing table.
Right.
And that's what our underwriters do. And we can, once again, they move files in and out rather quickly.
Now, does an underwriter have a greater risk in the organization for letting certain things go by? I mean, are they on the same tier as everybody else, or if an underwriter makes a mistake, it's like a huge? I mean, how does that work with an underwriter?
Well, underwriters, they have, especially with FHA, they have their own ID number.
Ah, okay.
So
they're
on the hook.
Okay.
So you get a lot of buybacks. You get a lot of loans you've closed. They're going into foreclosure.
Okay.
They start to investigate, and they look at the underwriter.
Yeah.
They look at the company. They look at the underwriter. They look for that
Yeah.
that common thread. So underwriters do have, they have the red pen for a reason. They have a lot of, responsibilities. They need to make sure that the loans are put together correctly,
Yeah.
and everybody's protected. We want to make sure that when we close a loan, it's a good loan.
Right.
If we need to sell it, we can sell it. If we need to service it, we'll service it. But at the end of the day, they make sure everybody has crossed their T's and dotted their I's.
So they're almost like an agent. They have like a dual type of agency. They work for your company, obviously, but they're also for an agent for the person who's going to end up with the loan at some point, right? There's a criteria. So they really are on the hook if they make a bad decision.
Yeah,
because
absolutely.
It's not only a bad day on a Friday afternoon. They're going to catch it from above somewhere, right?
Yeah, and it's really not that they're on the hook. It's just and our underwriters are so good, and they take it personal. If a mistake was made, they really take the time and the care to make sure mistakes are not made.
Wow.
We haven't had buybacks are not a common theme with us.
Yep.
And investor suspenses, that's not a common theme with us. I think everybody does a great job across the board to make sure that final product that we put out into the marketplace is a great product.
Wow, that's great. Wow. This is a lot of interesting stuff, and boy, I wish we had an extra half hour because we got about 11 minutes left. And of course, folks, grab your pencil and paper because you're going to need it when we come back from the commercial break, and we'll be right back.
Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
Okay, and we're back with Dave and Mike of Main Street Home Loans. And here's the special offer that these guys have graciously agreed to do today. If you give either Dave or Mike a call, they will basically consult you as to how to get a mortgage, qualify you for a mortgage, tell you what the best mortgage product that would fit your needs, and get you into a property, whether it's an investment property or an owner-occupied property, your first home, second home, it doesn't matter. And the process doesn't take very long. What does it take? About 15 minutes on the phone or so, right, guys?
15, 20 minutes to get the information we need to start the process.
Wow, that's great. So please take down these numbers. Dave's number is 401-378-0466. 401-378-0466. And Mike's number is 401-241-4043. I'll say that one more time. 401-241-4043, and they'll be more than happy to speak with you and guide you through the system. And again, there's such a myriad of products, mortgage products out there available right now. Why take a chance on just thinking on your own that one might be better for you than the other when you can have the mortgage professionals tell you what's best for you. So guys, Mike, we'll start to wind down now. We got about 8 minutes left, but how do you guys keep in touch with your clients? I mean, that must be a task, right? Other than calling them on the phone every once in a while. How do you must have a system of doing that, right?
Yeah, absolutely. And before we do touch on that, I also want to touch on the fact that if you give us a call, Dave and I will also help you, like we mentioned, with your credit as far as credit repair. If you don't think you are there, that is a service we'll spend time with you and get you where you need to be. We do not charge anything for that. Our ultimate goal is to just get you in a home.
That's great.
But yeah, as far as our communication, Dave and I, we always like to try to over-communicate a little bit to the client. I call it being professionally persistent versus being annoying. But we try to be there for every step of the way. So once we get everything we need, we're going to send it over to our processor, and she and either Dave or myself, depending on the loan officer, are going to constantly be there checking in with you, make sure we get every document. You will hear from us as actively as daily, depending on how the conversation goes and what we need. I mean, at worst, it'd be at least once a week we'd be checking in. I'd be just like, hey, we're clear to close. Just want to let you know there's no changes.
So in the beginning, it's like everything else in life. In the beginning, it's a lot of upheaval. I need this, I need that, and then after that, it's just kind of as you go along.
Yeah, and I mean, the thing I think that makes us a little bit different, though, is that, I mean, we're going to be, in addition to calling you, in addition to emailing and texting, and we get it all from clients, is that we're nights, weekends, days. I tell everyone, you have as much access to my cell phone as my wife has. So if she can get a hold of me, you can get a hold of me.
Wow, that's pretty good.
So, and that's kind of how both Dave and I
Does
operate.
your wife know about that?
Well, she will if she's listening.
I just want to make sure. Is she listening to this broadcast right
she'll
now?
Know.
If you want to give her a shout out, then feel free.
So, absolutely. Love you, Megan. So that's kind of how we work. And I mean, in addition to that, they're going to get emails throughout all of the different milestones. We're also going to be sending that to the listing agent. We're also going to be sending that to the buying agent, because it's not just Dave and I and the client. There's multiple parties that are involved in any transaction. So we want to make sure that everybody knows where we are at all stages, just so that way, every single person can be on board and make sure that it goes as smooth as possible.
Sure. Now, Mike or Dave, doesn't matter. What are the typical, like if someone called you tonight, this afternoon after this broadcast, and said, I'm interested in acquiring a loan to buy a house, what are the typical questions that you ask them? Is there anything, is there a baseline of questions?
Yeah. I mean, I wouldn't say we have necessarily, like I said, because every client's not a one-size-fits-all. The way that I like to do it, and Dave as well, is I do generally start by asking them a couple generic questions. So I'll start by saying, you looking for a single or a multi or a condo? Is it just you on the loan? Are you a first-time home buyer? What cities are you looking in? Price points, etc. And then I take all the information down in my notebook, and then I stop and I ask them, what questions do you have? I can basically answer, now that I have a little bit knowing about you, I should be able to answer about 75% of your questions here.
Oh, okay.
So I want them to feel comfortable. It's more about making sure that they feel comfortable throughout the whole process. So it's more, I try to make the whole process about answering their questions versus what questions I need to ask them, just to make sure that they are comfortable. Because if you've never bought a house before and you're talking to me for the first time, the first thing you're going to think before you dial the phone is, this is going to be scary, this is intimidating, this whole process, it's going to be long and awful and dreadful.
Sure.
And what we generally hear after the first phone call is, I'm so glad I made this phone call. This was so easy. This made me feel so much more comfortable.
You weren't going to draw a quart of blood.
Yeah. It's a lot of happy, like, ooh, that's how this goes. We like to explain the process so they know every step of the way. All right, so you're going to do this, and you're going to hear from me here, and here's, so they know exactly what the process looks like.
I see.
So that there's no surprises, down the road.
Wow. Yeah, and that's great because I think a lot of it is fear because you almost don't want to make that phone call. It's like years ago when my broker, we had to go out soliciting, and it was knocking on doors. And he used to have a saying: the first time you knock on the door, you say, "Well, I hope they're not home," as you're knocking, because you don't know what's on the other end of the door. So those folks, once you make the process easy for them, I'm sure they tell other people about it, right? They must go out and spread the good news because they're so happy, right?
Oh yeah, absolutely. I mean, Dave can attest to this. I mean, the referrals one, it's obviously great because it means that somebody else appreciated what you did enough to share it with somebody that they really care about. Just last week, it's kind of funny. I helped a lady refi, and now she wants me to help her brother refi.
Wow,
she also gave me her friend's name who's buying a house, and her other friend's calling me next week, all because I helped that one lady. Now, she, in addition, wants to buy another home next year.
Wow.
So that one lady that I helped about a year and a half ago came to me with 3 people that she wants me to help because of the service levels I gave
That's
her,
great.
and wants me to help her again when she's ready. So, and I'm sure Dave can tell things like that. And that's the best feeling in the world. Somebody calling and saying, "This person said you did a great job. You're extremely easy to work with," and they were so happy that
Nice.
I want to work with you.
Yeah, that's great.
Yeah, absolutely. I mean, that's why we do what we do. I love getting to the end of the game, and somebody thinks what we did for them was great enough for them to refer it to their family members, to their co-workers, to people at church, whatever it may be. It's the referral part of the business is another part of it.
That means you did it right.
That means the team did a great job.
Wow, that's great. Wow. Well, we got about a minute and 45 left. Last question of the day before I have you give the audience your contact information. Are you guys optimistic about the market, where we're going, and the longevity of this run now?
Absolutely. I mean, the rates are low. We got a strong employment market, strong labor market. Layoffs are low. Unemployment's, near a 50-year low. So I think, going into the next 6 to 18 months, I think we're going to be in a good spot.
Wow. Yeah. How about you, Mike? You think same thing?
Absolutely. And just to kind of add on to that, and like you said, just because of the demand that we're seeing versus the supply, even if there is a hiccup in one of those things, so unemployment ticks up a little bit, or home price rates tick up a little bit, I still think that we're going to be in for a strong market because of the demand factor of it.
Yeah, and those rates are so low right now. No one's ever going to want to give up those low rates in the future. I mean, I have a small mortgage on my property because it's 3 3/4. I don't want to pay it off. I want to be able to keep the money to do other things because the cost of the money is so low. Guys, you want to give the audience your contact information again, your email and phone numbers one more time? Or?
Yeah, absolutely. So Mike Plummer from Main Street Home Loans, and you can give me a call or a text at 401-241-4043. Once again, that's 401-241-4043.
And Dave Travers at Main Street Home Loans. You can give me a call or text at 401-378-0466. Once again, 401-378-0466.
Very good. Thanks a lot, guys. We hope you enjoyed the broadcast. And, of course, if you have any questions, you can give Dave or Mike a call immediately following, and we can take it from there. Good luck and happy Thanksgiving.